In this lesson of the VITA Basic Tax Law course, we will be covering filing status. Now, if you remember in our last lesson, we covered some tax filing basics. We covered things like what forms do individuals need to file and who needs to file those forms. And we kept coming across this big concept called filing status. And I kept putting you off and saying, wait till next lesson and we'll cover that. So here we are at our next lesson and we're going to cover that. We can think of filing status as how to file or how to begin the filing process. So we covered the what forms, who files, and now we're covering how individuals start to file their returns. There are 5 ways individuals can file their returns, 5 filing statuses. And last time we brought up single and married filing joint as 2 of the more common. Married individuals also have the option of filing separate, married filing separate. And then there are 2 special filing status categories that taxpayers may be able to claim if they are supporting other qualified individuals. And those are head of household and qualifying widow or widower. Before we get into the nuts and bolts of determining filing status, let's take a quick look at our flow of information. If you remember from the Intake Interview and Quality Review course, our intake form, Form 13614C, has information about marital status and household information in Part 2. Our job is to take that information and translate it into a filing status that is reported in one of the 5 checkboxes at the top of the 1040 form. Now you might be wondering, why is this filing status thing getting so much attention? Why are we putting so much weight on it? And why are those little check boxes at the top of the form even before the taxpayer's name and social security number? Well, that is because the filing status leaves a huge footprint on the return. Filing status affects the calculation of the income tax, the amount of the standard deduction, and if a taxpayer can claim certain deductions or credits, if they can claim all of those credits or deductions, if they can only claim some of them, or if they're completely disallowed. So, on to the good stuff. Let's start with our first filing status, single. And I like to think of this filing status sort of as the default status. If our taxpayer does not qualify for any other filing status, what are they going to file as? Well, single. So a single tax filer would be considered unmarried at the end of the year. And at the end of the year means on December 31st, were they married or were they unmarried? So this person might never have been married. They might have gotten divorced. Even if they got divorced during the year, the tax year that we're preparing for, if on December 31st they were divorced, then they will file single unless they qualify for one of our special filing statuses. They might be legally separated. They might be widowed without qualifying dependents after the year of the spouse's death. And that's really important to remember that not every widow or widower will qualify for a qualifying widow or widower. There are special rules, special qualifying circumstances that allow somebody to claim that. So if they don't have those special circumstances and they are a widow or widower, they're still going to be filing as single. So again, our special statuses are head of household and qualified widow or widower. If they don't qualify for those filing statuses and they are considered unmarried, they will be filing single for this year. Our next filing status is married filing joint, and this is for taxpayers who are, one, considered married at the end of the year. And if you'll remember, married at December 31st is married at the end of the year. So if they were married the whole year, they were married at the end of the year. If they got married at any point during the year and they stayed married, by December 31st, they're still married, then they are considered married for the entire tax year. And this includes state common law marriages. This is a little more complicated and the laws vary from state to state. A lot of states don't recognize this anymore, but we don't see it too much. As we discussed before, we don't have to audit our clients, so we don't have to see their marriage certificate. It's enough if they come to us presenting that they are married, then we file them as married at the end of the tax year. But as we discussed before, if they are legally separated is considered unmarried. So the second criteria to this is that both spouses need to agree to file jointly. So if one of the spouses says, I don't want to file with so-and-so, then they would need to file separately. They could not file jointly. Both spouses need to agree. And this is because when both spouses file a joint return, they are legally responsible for everything that is on the return, both together and each individually. So when we talk about married filing separate, we'll kind of talk about why some taxpayers feel uncomfortable signing a joint return with their spouse. However, generally speaking, filing a joint return is going to result in greater tax benefits than if the couple files separately. They have a more beneficial tax calculation, and they will be able to claim more credits and more deductions if they file joint. If these taxpayers who are considered married at the end of the year do not agree to file jointly, then they would file married filing separate. And as we discussed before, generally this is going to result in fewer tax benefits than if they filed joint. However, some of the reasons why one or both spouses might want to file separate include one spouse has a debt obligation that is going to cause a garnishment of the refund. So things like back child support or back federal or state taxes, past due subsidized loans for educations, those might be things that would cause the garnishment of the refund and might cause the other spouse to not want to file a joint return with the spouse who has the debt. Another reason is that the spouses can't agree on how to split the refund or to pay the taxes due. One spouse might not be comfortable with the claims of the other spouse. That happens too sometimes. One spouse maybe has some shady looking dealings and the other spouse does not feel comfortable signing that return. Or spouses might be estranged. There are other options besides filing separate for our married clients with some of those concerns that we talked about. They could file jointly in the case where one spouse has a debt obligation that's going to cause a garnishment of the refund, and attach Form 8379, the injured spouse allocation, so that the garnishment would only be taken out of the refund that was properly allocated to the spouse with the debt. It could be if the spouses think that they would get home and not be able to agree on how to split the refund or pay the taxes due. Form 8888, the allocation of refund. Sometimes it's easier for people to agree when they're in a public setting. We're all on better behavior. That could be an option that would allow the refund to be split between two different accounts and might cause less messy arguments later at home. In the case where one spouse has not been honest about their tax situation, there is request for innocent spouse relief, Form 8857. That is not filed with the original return. It is assumed that if one of the spouses has reason to believe that the other spouse is not going to be honest, that they would file separately at the time. They would not file the joint return. So this other form, the 8857, would be filed later at the time that the dishonesty was found out. That form is out of scope for us. So if we have a client in that situation, we would let them know that they need to seek some assistance from a paid preparer to help them with that. And we'll talk more about the case where spouses are estranged. In certain circumstances, a spouse might be able to claim a head of household, but we'll talk more about that in our next filing status. Of our two special filing statuses, the first one we will discuss is head of household. In order for a taxpayer to file as head of household, they must be considered unmarried at the end of the year. And we'll talk more about an important caveat to this in our next slide. They must also have a qualifying dependent, which we'll discuss in a couple of slides what that means. And they must have contributed more than 50% of the household support. As I briefly mentioned when we were discussing the married filing separate status, it might be possible for an estranged spouse to qualify to file as head of household. In order to be considered unmarried for the purpose of filing head of household, a taxpayer would need to file a separate return from their spouse. They would need to pay over half of the household support. The other spouse could not have lived with the taxpayer for the last 6 months of the year. The taxpayer must be providing the main home of a child, a stepchild, or a foster child for more than half of the year. And they must be able to claim that child as a dependent. Now, there's an exception for the ability to claim a child if a non-custodial parent is claiming the child for that year. We'll look at how to deal with that form-wise in our next lesson when we discuss dependents, but that is an exception. Somebody may have a non-custodial parent claiming that child in that year, but still be able to file as head of household and be considered unmarried for head of household purposes. This is a more complicated situation in community property states, which Washington is a community property state. So we're going to follow the lead of the AARP tax aid program in our area and say that if we come across this situation, the spouses would need to have lived apart for the entire year, and they would need to have a separate banking happening. As promised, we are now going to discuss who are these qualifying dependents that qualify our taxpayers to file as head of household. And this chart comes from publication 4012 tab B. The first column presents a relationship that this qualifying person might have to our taxpayer. In the second column, the middle column, we have some other tests that might qualify or disqualify that person from being a qualifying person so that our taxpayer can file head of household. And then of course in column 3 we get our result. So if the person is a qualifying child, which we'll discuss more about that term in our next lesson. But it might be a son, a daughter, a grandchild who lived with the taxpayer more than half of the year. If that qualifying child is single, then they are a qualifying person whether or not they are claimed as a dependent on the return. However, if that qualifying child is married, then it matters whether or not the taxpayer claims them as a dependent. If they are claimed as a dependent, they would be a qualifying person. If they are not claimed as a dependent, then they are not a qualifying person and our taxpayer cannot use them to file head of household. If the relationship is a qualifying relative, which is another important term that again we'll discuss in our next lesson, if this qualifying relative is your mother or father or taxpayer's mother or father, if our taxpayer can claim them as a dependent, then they are a qualifying person. And notice that it does not matter whether or not the mother or father lived with the taxpayer. So even if the mother or father is living in a different location, if the taxpayer can claim them as a dependent, then they are a qualifying person to file as head of household. If the taxpayer cannot claim that parent, the mother or father, as a dependent, then they would not be a qualifying person. Then we have another type of qualifying relative, somebody who is a qualifying relative but not the taxpayer's mother or father. Then there are certain special types of relationships. So it could be son, daughter, stepchild, foster child, any of their descendants. It could be a sibling, a half sibling. It could be a step parent, or it could be ancestor of parents, so a grandparent. So if they have that special relationship, then they would be a qualifying person. However, if that person didn't live with the taxpayer for more than half the year, again, they would not be a qualifying person. And then, as we'll discuss more about in our next lesson, if that qualifying relative didn't qualify under the special relationship test, but because they lived with the taxpayer for the entire year, that is not a qualifying person to file head of household. So they might be able to be claimed on the return, but our taxpayer would not be able to file as head of household with that relationship only. And then, of course, if they can't be claimed as a dependent, then they are not a qualifying person to qualify our taxpayer to file head of household. Whew. Okay. Just one more slide on head of household. I'll try to be quick with this one. So there is the support test for head of household. Did our taxpayer cover more than 50%, more than half of the household support? So in publication 501 and also in publication 4012 tab B, there is a worksheet. I kind of suggest using the one in the 4012 because it has a little more instruction about it, some of the caveats with filling out the worksheet correctly. This comes from publication 501. I put it here because it's a little more succinct, but just so you can kind of see that it has a list of types of expenses that count towards household support. So things like clothing are not part of the household support. It's just these things like, you know, property taxes, mortgage, rent, utilities, repairs and maintenance. Food does count, and other kinds of household expenses. So not individual expenses, but household expenses. So, and then there's a column for the amount that our taxpayer paid, and then of course a column for the total cost. And then down below that, you have a comparison of how much the taxpayer paid to the amount that others paid, to help you determine whether or not the taxpayer contributed more than 50% of that support in order to qualify to file as head of household. And on to our final filing status, and the second of our two special filing statuses. We have qualified widow or widower. And this filing status is only used for 2 years after the year of the spouse's death. The taxpayer must not have remarried. They must also have a qualifying dependent. They must have contributed more than 50%, more than half of household support. And it just mimics the tax benefits of married filing joint status. And if you think about it, it would give somebody with a person that they're, you know, supporting, like a child, a couple of years to kind of catch their breath after their spouse died, before they would have to begin filing single and have, you know, a very different tax situation. So it always seems like there are test questions regarding this filing status and the timeline of filing qualified widow or widower. So I just wanted to kind of clarify it. So in the year of the death of the other spouse, provided that the taxpayer has not married, then the taxpayer would file married filing joint with their deceased spouse. Then in the next year after that, again, provided that they haven't remarried, they would use the qualified widow or widower status. And the next year as well, provided they didn't remarry. And then in year 3 and beyond, they would begin to file single again. Before we head out, I wanted to point out some of the resources that we have to help us determine filing status. In Publication 4012, Tab B, there's a decision tree. So if you ever get stuck, you can always go back to the decision tree and answer the questions and follow the flow, and it will get you to a filing status. In addition to that, on irs.gov, there's an interactive tax assistant. What is my filing status? And it's a series of questions, and depending on the answers, again, it will get you to a filing status. So if you ever get stuck, there is always help. Just look it up.